Good evening everyone, and welcome to another session, which means we have a FOMC news today. Not the next 10 seconds, so I'm really excited about volume. Hopefully it will be a big, so we can make a really good trade. So far, I think Dow Jones or US 30 looks much better than the Nasdaq, because you can clearly see Nasdaq is pretty much the whole, even the Asia, London and New York session pretty much in the range, not really clear direction, while US 30 is pretty much selling off, as you can clearly see. So we could eventually expect continuation into the downside. Okay, we will also have FOMC press conference here live. Okay, federal fund rates, nothing special. We expected 3.75. So that's why we don't have such a crazy volatility right now. The most important news will be more likely in 8:30, which means in the next 25-30 minutes. Okay, pretty much FTSE today 1% down, German 40 0.5% down, US 500 0.25, US 30 0.7%, and only Nasdaq is today currently in a green, as you can clearly see, but still strong range. So I will more likely be focusing on the Nasdaq, on the US 30 today, and I will eventually looking for longs above this area. Buys above 48,902. And more likely sales will be here. Sells below 48,821. Let's do 20. Pretty strong consolidation last pretty much almost 2 hours, let's say. Yeah, so let me focus on the Nasdaq, on the US 30. I already entered the sales. It's a little bit riskier, but yeah, let's wait and see what will happen. Let me just write that down. Okay, my entry is 48,818. That is slightly, I think, around here. Stop loss 80 points. TP for the moment, like, I will not have my TP, but I will have a stop loss placed above this highs, which is around 80 points. Stop 48 898. Okay, that's it. Oh damn, Nasdaq is selling off as well. But I'm not gonna lie, US 30 looks much better. Currently around 10 points in profit. But yeah, that's pretty much nothing for the Dow Jones. Okay, so far so good. We need to see a little bit more volatility. 23 points profit. Okay, good thing is that we already created upper wick. Okay, or not. Let me see Nasdaq. First 5 minutes of Nasdaq pretty bearish. So hopefully we will see continuation to the downside. Dow Jones is already down 430 points while Nasdaq is up 20 points, which is huge difference. And I mentioned that negative correlation yesterday when we saw Dow Jones moving upside, but Nasdaq was falling down. Now we have opposite price movement again. But yeah, I mean, nothing special, nothing crazy, at least not for now. Okay, I'm also enjoying in my coffee. So far so good. $55 points already, 55 points. Amazing, beautiful. Okay, 60 points. I could eventually close partials. I closed 50% at 66 pips profit. Closed 50%. Okay, maybe something like moving stop loss on break even would be also a good idea. So stop loss will go on break even. Okay. Stop Stop loss goes to break even. Okay. Amazing. Maybe I can write that down. Close 50% and stop loss is break even. Okay, so even if we see some crazy volatility, which means if price manage somehow to go higher, I will get only 50% profit from this position, but that's still fine. But if I don't want to close full position just because price could continue to go down, but 40 points still in profit. Let's see if price could eventually continue going down even lower. Nasdaq can, but Nasdaq still didn't break below the daily lows. If I want to go with the sells, yeah, that's a tricky one. Let me see, 50-minute time frame. Yeah, I want to go with the sells around this. Because if price managed to break below this area, let's say there's higher probability that price might continue to go down. Okay. Sells below. $27,000, 40, let's do 45. 27,045. Okay. For longs, I will be pretty much comfortable going into longs above this highs. 27,155. $27,155. Okay, so far this is the range I will probably not be trading. Let me share this. Okay. So far so good. We still don't have a crazy volume, but that will more likely come after press conference. Okay, still nothing. The CVD also showing a little bit more bullishness on Nasdaq. That's why I'm not feeling comfortable taking shorts on Nasdaq, while US 30 you can clearly see we had a pretty strong two candles, big bearish candles on CVD as well on the price, and that was pretty much confirmation for me that price might continue to go down even lower. If you have any questions, feel free to ask. Oh, damn, look at that. I just noticed the gold is falling down really heavily. At least, yeah, I mean, I was expecting the gold will go down. Oh, damn, look at that. Okay, after New York Stock Exchange opening, we had retest of 4,510, which was a significant drop. Yeah, that was my analysis, I think, from yesterday, where I kind of expected the price could retest this area Okay, maybe this could be the problem. Yes, indeed. Let me remove drawings. Okay, you can clearly see yesterday we had this volume profile, and today price and I got rejected from this strong consolidation right here. Pretty much slightly above and slightly below point of control, and then we had a straight continuation to the downside. Since this is the highest and we are looking for sales, every bigger pullback could be better selling opportunity. And according to this view up, we had a couple good selling opportunities right here. 1, 2, and 3 potential sells. Okay, maybe Mike was a little bit off. Hopefully now is a little bit better. Kind of considering closing the rest of my position. Yeah, now really doesn't even matter. Okay, I still didn't get stopped out on break even. Next time maybe I should be a little bit more aggressive with this type of entries, which was obviously really good. CVD showing now a little bit more bullish momentum, so I could close my position. Yeah, but yeah, it's 14 points with 1.5 lot gives me only 20 bucks, 20 euros, so that's nothing. I would rather left at this position and wait if price could continue to go down, or even if price goes up, hit my stop loss, or at least add a half on break even. I will still be happy with a 50% profit from this trade. Could I go with sales on Nasdaq? Very risky. Let me take a look at 30-minute time frame. Yeah, 30-minute time frame is really tough. Look at all these wicks below this value area low. Crazy. Still 10 pips profit. Yeah, I got stopped out right now. But I mean, yeah, it was good trade, I'm not gonna lie. Let me just so for buys are still valid. Okay, let me remove this, this, this. Sells below. That was now 48,755. 756. This will be for another sell, and for buys are still above 48,902. Is 7 minutes left. Then we will have press conference. Okay, we have a small divergence here between CVD and the price. I'm already seeing a lot of trades right there. A lot of volume going on within this range, a lot of ejection, so price could continue to go down, and if we see a breakout below 48,756, we might see continuation to the downside. Okay, let's take a look how the US 30 was trading the last time when we had FOMC, and that was the March 18th. Okay, let's go on a 50-minute time frame and let's zoom out, find the March of 18th of March. Okay, it's close, 28, 18th of March. It's here. Okay, this is the price movement the last time we had FOMC. That was the range before, and you can notice we have similar situation even right now. This was 1930 before FOMC, 1945. Okay, let's just see what time is this now. $20.30, 2015. Yeah, the same thing in price went down now. So I will be looking for the same situation. If I see a breakout below this lows 48,756, I will be looking for sells. Okay. Now if price somehow managed to break above, buys above could be also a good opportunity. Maybe around 48,840. 48,840. Buy, sells below. And hopefully we have to be fast. We need to be fast here. Okay, gold is falling down. Eventually Nasdaq is falling down. US 30 will fall down as well. And if I see breakout of 48,756, my stop loss will be 48,830, 35, around that. I don't want to go with the sells right now just because I might get stopped out. And that's not something I wanna do. But pattern is really similar. If you look at last FOMC and now, pretty similar situation. Now we could expect price to continue to go down. Let's take a look at Nasdaq of 18th of March. Nasdaq is here. 1935. Price started to go down even before, and you can clearly see price went down. Price went down 200 points, then a small pullback, and then continuation to the downside. So it is high probability that price will continue to go down.
This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have, I think, left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
48.7536, I will be willing to go short.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert, and monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate, and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut, that number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, it's a much closer thing on the committee than it was in March, And, that makes all the sense in the world, it seems to me.
Claire.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools? So
I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil Irwin with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook?
Let's do 1-1 risk reward. Okay, I added another short, and more likely price will go up and hit my stop loss because we're seeing a little bit more bullish momentum right now. If I get stopped out, it is what it is. Yeah, a lot of bullish momentum. Okay, so far we still have rejection, so this area right here, hopefully price will remain below that area. Until then, I mean, if we see price still below this area, it's high probability the price might continue to go down. My second entry is currently at break even. So yeah, I will now end the stream and I will let you know what will happen with my positions in the Telegram group. So thank you guys for being here and see you tomorrow in the new session. Thank you. Bye bye.